Hello, good day to all. This is Kelvin here again. Welcome to this week edition of Weekly Technical Outlook on the major four stock indices. So before I highlight the key technical elements and as well as the key levels for what to watch for this week, let's take a look at the disclaimer slides first. Okay, so the first key technical element that I would like to share with you all will be this market breadth analysis on the S&P 500. The bottom of this chart actually represents the number of constituent stocks in terms of percentage that are making new 4-week high versus 4-week low. The orange histogram is represents the number of constituent stocks making new 4 weeks highs, and the turquoise blue or turquoise green histogram bar represent the percentage of stocks that are making new 4 weeks low. So as you could see, the whole of last week, the S&P 500, the number of stocks that are making new 4 weeks high is much higher versus the number of stocks that are making new 4-week low. So after this spike up, okay, interestingly, this spike up is actually triggered by the positive, we call it news flow based on the Pfizer COVID-19 vaccine news. The number of stocks that are making new 4 weeks high in terms of percentage has been trending much lower for the whole of last week. And if we take into account of the prior week, which is 2 weeks in average on average, so on 2 weeks on average, the number of stocks that are making new 4 weeks high is actually trending much lower. All right. So in terms of market breadth analysis, this is not a kind of a encouraging sign in the S&P 500. So how about the NASDAQ Composite Index? Okay, similar market breadth analysis, number of percentage of stocks that are making new 4 weeks high versus percentage of stocks that are making new 4 weeks low. The number of percentage of stocks that are making new 4 weeks high is much higher versus number of stocks making new 4 weeks low. But if we compare it the whole of last week, the trend is actually trending downwards for the number of stocks that are making new 4 weeks high. And if we take into consideration in the prior week ago, pardon me, which is the whole of 2 weeks ago, in terms of trend is rather flattish, much better than the S&P, but I would say not so encouraging as well in the Nasdaq Composite Index. Good. So with I've covered market breadth analysis for the two composite, the S&P 500 and the Nasdaq Composite. So all in all, it's not so really that great if we take a look into account of the trend in last week and as well as 2 weeks ago. So now let us open the CMC markets platform. So I will now share with you all the individual technical elements as well as the trend to watch on the various indices. So let's start with the S&P 500 first. So on the S&P 500, let us do a bit of recap. So this is the monthly chart, the long-term chart. Still recall that I share with you all the key levels to watch. The big resistance will be at this 3650/70. So what's this level? This level is actually the upper boundary of this expanding wedge that is in place since September 2018, as well as the 0.618 Fibo extension level. All right, so on the daily chart, what we could see is that it actually managed to hit this 3650/70 within a single day, which is on Monday after this positive news flow on this Pfizer COVID-19 vaccine. Then thereafter, it does started to trade sideways, holding above 3518. So what is 3518? 3518 is actually the former pullback support of this descending trend line resistance that previously kept further upside on the 12th of October, all right, and as well as on the 4th of November from here. So 3518 is pretty much key in the medium term if you could to look at the from a price action perspective. So what we could see over here is it actually formed a bearish shooting star on Monday that is just traded sideways, and right now in today's Asia session it's just trying to actually shape a positive push up or price action. All right, but as we all know, it's still pretty much long before the US session kickstarts later today. So as for this week, right, what we could see over here is a pretty much of a mixed element. We have a daily bearish candlestick pattern, and just now I shared with you all the S&P market breadth, which is the percentage of number of stock making new 4 weeks high in terms of that trend. Is not so fantastic in as in the last 2 weeks. So I decided to actually this week to turn neutral on the S&P. So neutral between this range of 3670 and 3518. So if we start to see a 4 hourly close, this is the 4 hour chart, the 4 hour close above 3670, potentially we could see the S&P making another, I would say, all-time high at 36, pardon me, 3760 slash 3770. So what's this level? It's actually the one-time Fibo extension. If we start to see a break below 3518, that means a 4 hour close below 3518, we could see another round of corrective decline to actually allow the S&P to actually retest this range support that is in place since September 24th September low, as well as 30th October low, which is at 3230. Okay, so now let's take a look at the NASDAQ 100. So NASDAQ 100, we still have a bit of room more to go to hit the big resistance at 13,000 slash 1302, which is the 1.618 Fibo projection from here. Okay, then let's look at the daily chart on the NASDAQ composite. So as you could see that the NASDAQ composite on the daily chart on Monday, this is Asia session, it attempt to do a kind of a breakout above this 12,180 level, which is this descending range resistance that is capping previous push up since the high of 2nd of September. So if you look at the NASDAQ 100 index, it hasn't made a new all-time high yet, okay, compared to the S&P. So what we could see right now in today's Asia session, right now is trying to attempt to retest this descending resistance again. So now let's take a look at the 4 hour chart from here. So on the 4 hour chart over here is that I could actually, what I do is that I will actually do a kind of a neutral stance as well, very similar to the S&P 500. So as you could see that the NASDAQ composite market breadth analysis is not too fantastic as well. So neutral between 12180 and this 11570, which was actually last week low, where the NASDAQ 100 actually shaped a kind of a pullback after a failure breakout of this 12180. So what's 12180 now? So if you look at 12180 now, either than is the descending resistance that had failure bullish breakout. So if you look at right now, pardon me, right now from here, it's actually the 76.4 Fibo retracement. All right. Okay, 76.4 Fibo retracement that is actually this current push up price action that you got to break above before seeing a retest of this 12466, which is the current all-time high. So neutral for this week. If we start to see a 4 hour close above 18180, that will actually kind of validate a bullish scenario to see it retest to its current all-time high at 12466. Above 12466, it should take up much higher towards the one-time Fibo extension, which is at this 12970 slash 13,000, which is our big resistance as highlighted on the monthly chart as well, and also this kind of a involving short-term ascending channel that's in shape or in place since 3rd of November low. So if we start to see a 4 hour close below 11570, then we will start to see another leg of decline to actually retest this range support level that is in place since 22nd of September low, now acting as a support at 11,000. Okay, so pretty much neutral stance for the NASDAQ 100 composite as well. Now, moving on to the Hong Kong 50 index. So let me highlight the key technical elements. So the Hong Kong 50 index, the last week rally actually stopped at this major descending resistance, which is 26,740. So what is 26,740? Is actually the former, or say that the swing high of this March 2020 candlestick, and as well as this descending resistance that has kept previous push up on two instances in May 2019 and as well as January 2020, drawn from its current all-time high at this January 2018 swing high. So pretty much important, big level to watch on 26,740. So now let's move to the daily chart from here. Okay, so as you can see that on the daily chart, the price action on this Hong Kong 50 is now to start to show a bit of pullback after testing on this major long-term resistance at 26,740. And if you look at the daily RSI, the daily RSI has really started to retreat from this overbought region after a retest from it. So potentially what we could see in terms of price action on the on the Hong Kong 50 and its daily RSI momentum indicator, what we could tell us that this current push up from the low of 30th of October, it seems to be a bit of extended, overheated, and what is the RSI actually suggesting to us that potentially we may start to see another leg of consolidation or pullback below this major resistance at 26,740. So now let's move on to the 4-hour chart, which is the strategy chart for this week. So definitely I will actually put 26,740 as my major pivot level. Okay, pardon me, there's a sparing error over here. It should be pivot. All right. Okay. Okay, so 26,740 will be my key medium term pivotal resistance for this week. So what we could see a bit of consolidation right now from at this level as highlighted on the daily key technical elements towards this 25,770. So what's 25,770 is the former swing high area of this 28th of August 2020. So if we start to see a break below 2570, it could actually take us down much lower in this pullback or consolidation to actually retest this support at 24,950. What's 24,950? 24,950 is being confluenced by two technical elements: the former minor swing high of 23rd of October, and as well as this pullback support of the former descending resistance that was drawn from 6th of July 2020 high. All right, so pretty much of a bearish stance on the Hong Kong 50 is kind of a consolidation below this key resistance at this 26,740 pivotal resistance. So, but definitely, if we start to see a break above a 4-hour break above this 26,740 level, or we could actually see a further push up to actually test this 27,940 level. So what's this level is actually the 2-time Fibo extension as drawn from here. Okay, so now let's move on to Europe over here. So in Europe, I will highlight to you the German 30 index, okay, which is one of the key indices in the European stock market. Okay, it take a while to load from here. Okay, good. Okay, so all in all, I would highlight the. So let's start with the major. We call it the monthly chart first. So in the monthly chart, right, this German 30 index. Yeah, the long term chart is still in a bullish trend, except that on since 2 years ago, Jan 2018, it has been trading in a kind of a sideways formation, not breaking above this 13,800 level. Okay, so that's a big resistance to watch, to keep in mind. Now let's move on to the daily chart. So as you could see, this daily chart, right, other than this big resistance since 2 years ago, so this 13,800, it also can be drawn. We call it another resistance can be drawn from this 13,800, taking from the high of this year, which is February 2020, all the way. It's a kind of a descending range resistance. If you look at last week price action, attempt to test this level, and it start to trade sideways from it. So this level right now is kind of acting as a resistance at this 13,320 level, which is also pretty much correspond to the former swing high of 3rd of September 2020. Another interesting observation to watch is on the daily RSI. So you look at the daily RSI, it seems to us that it's coming close to a kind of a corresponding resistance as well level at the 65 level mark. So what we could see over here is a bit of a roadblock on this German 30 index to actually pretty much make a headway above this 13,320 level in terms of price action and as well as in terms of the daily RSI momentum indicator. So now let's dive on the lower time frame, which is the strategy chart for this week, which is the 4-hour chart. So what's interesting about this 4-hour chart over here is firstly is this element I want to share with you all is the 4-hour daily 4-hour RSI. So this 4-hour RSI, what you could see over here is that it start to float into the overbought region last week. So what's interesting is that the price action, it starts to do a kind of a higher high, okay, shaping higher high on the 4-hour, but on the 4-hour RSI, it start to shape a contrasting picture or a reverse, we call it observation, where it start to shape lower high instead. So this is what we call a bearish divergence. So what it means that this current, we call it a momentum push up in terms of price action, the momentum is getting lesser and lesser as indicated by the RSI. So definitely in Asia session now, it time to shape a gap up over here and in line, pretty much in line with the S&P and the NASDAQ 100 composite. So what I could say over here is that I will actually have a more of a bearish stance, capping below this 13,320 key medium term pivotal resistance for this week. But definitely the support level to watch, right, is will be at this 12,930 level. So a bit of consolidation below 13,320, push down towards 12,930, first support level to watch. So what's 12,930? The next key technical elements of highlight will be this ascending minor ascending support that is in place since 30th of October 2020 low, and as well as this swing low of 13th of November, which is the low of last week, and as well as the 23.6% Fibonacci retracement taken from the low of 4th of November all the way up to this 12th of November. So if we start to see a break below 12,930, it could take us much lower in this consolidation pullback towards 12,700, which is the 38.2% Fibonacci retracement, as well as the minor congestion zone over here that has taken shape in the past of 15th of October to 24th of October. So however, if we start to see a 4-hour break above this 13,320, this kind of a consolidation or pullback bearish scenario will be invalidated, and we will start to see a push up to retest this major resistance at this 13,800, which I highlighted to you all on the monthly chart earlier. Okay, that's all I have for this weekly technical outlook on the major stock indices. Do have a great trading week ahead, and I see you all in my next video.